Hi, welcome to the Token.com podcast, the space where you will learn everything you need to know about blockchain, Web3, and the metaverse. This is Ana Solana, and thanks for joining us today. Today, we'll be speaking to David Piesse, a technology veteran that acquired his experience with .com era and now translates it to the world of blockchain. David, thank you for being with us here today. Please introduce yourself.
Hi, I'm David Piesse. I'm a financial services professional that specializes in technology. I've been around a while, so I've got a career of about 45 years.
Wow.
So I'm sure I can summarize that.
Yes, please do. Please do. Tell us a bit about your previous work.
Yeah, well, I started as an insurance professional in Lloyd's of London.
Mm-hmm.
And I quickly got, because I was one of the youngest people there, I got called into computer programming at a very early age.
Because nobody knew anything about it, right?
No, and also, they wanted young people that had passed the maths thing and all that. So I did that, and then that led me into a career of financial services and technology. So I went into Sun Microsystems as their global insurance lead after the .com era. I founded a company during the .com era.
I'd love to hear more about that.
Yeah, it was called WebEx.
WebEx.
WBX, not the EX one, but basically it was just the start of the Java era. Mm-hmm. And I'd sort of grown up with a lot of legacy systems that were at that time still very much in use, and now they're still being used.
There are some of them, yeah.
Yeah, but I mean, we I saw that Java had this thing called Enterprise Java Beans, and you could componentize things. So I thought if we put together a Lego insurance company back in the in the 90s, we could maybe change the world a little bit. So I created something called Underwriter Cafe.
Okay.
And Underwriter Cafe was a componentized insurance company, and one large insurance company took it straight away as an early adopter, and then of course no one else took it for a while. And
was it too early?
I think it was too early. Yes. Well, we got. Well, in those days, the legacy systems were still in force, so the venture capital was different, right? You didn't have the insurtech and the fintech type of maturity you have today. You went to venture capital companies. You combined several of them. They bought your company. You didn't go into detailed valuations. You just you went into the enterprise. But I mean, then of course the same venture capital company might buy a legacy company, and then they might just snap you up in a hostile takeover, and then you got put in the fridge. Your technology got put in the fridge because it challenged the legacy. That doesn't exist today, of course.
So I like this a lot. This like very stark comparison of the way things are done now and then. So now you find yourself like 40 years later, 45 years later, in the midst of this blockchain and Web3 revolution, right?
Yes, that's right.
And just like you were in the midst of the .com revolution. So which would you say are the main similarities and the main differences of the way that things
Well, the similarities are innovation, right? I mean, the definition of innovation is getting something out of the lab and into production as soon as possible. I mean, that hasn't changed. But what has changed, I think, is the maturity of certain technologies, the maturity of the investment world, the understanding more of technology. I mean, in the .com era, we were, the manual systems were still around, right? We were challenging manual and legacy systems. So I think it's the legacy. Change has been the big change here, but now we're trying to replace legacy with new technology, and now these no-code, low-code systems that come along are doing that. But we didn't have all these concepts then. We didn't, the API concept that's being used now. These were all very emerging things in the early days. I just went to change an industry. That's what I thought. I didn't say, oh, I'm going to do this, that, and the other. I'm just going to go in and disrupt the insurance industry because I find it a bit boring at the moment.
So that was your main motivation, basically?
Yes.
So you were like, I'm just going to disrupt everything.
Well, I think disruption is disruption with positive intent is a good idea, right? I mean, I think that's how the industry should work.
Totally.
And, if you look, insurance is my primary industry, but I've worked in all other sectors. But I think if you look at it today, it's still, it's an absolutely essential industry, right? It's survived for 360 years, even longer, but 360 years in the modern era, and it's absolutely essential. But it's also still a little behind when it comes to adopting new technology.
I think, but that's the case for the insurance industry and most, let's say, traditional industries in the world, right? So what do you think is stopping them from adopting all these newer solutions, all these innovations?
Well, I think if you look at when you're in a large corporation and you have an innovative idea, if there's 25,000 employees in that corporation, 24,950 come up against your idea. You then have to work with the other 50 through a minefield to get your idea to fruition. So if you look at climatology, climate right now, climate change, in-house climatologists might not be receptive to new ideas. And then AI comes along and people get protective. So I think it's freeing up some of the corporate structures might be a little good idea. Getting rid of some of the hierarchies in corporations. It's my opinion anyway.
So, as an entrepreneur, and you're telling me about all these people, individuals, corporations going against an idea. Was this the main challenge that you faced as an entrepreneur, as a disruptive entrepreneur?
No, well, education, customer education, of course, is also extremely important. If you look now, customer-centric is something that the financial services industry says is important. Back in .com era, that wasn't the case. So we had to educate customers to the insurance industry, to get the insurance industry to take it before we could go to their customers. Now, maybe we can go straight to the customer and then get the customer tell the insurance industry this is what they want to do.
Yeah, because you're selling now directly to a customer, right? So the way that we communicate has changed massively.
Yes, that's right. Well, you didn't have the data-driven concept either. You had database administrators.
How did you make decisions though?
Well, we didn't have the analytics. Even the stochastic modeling that we use now, and just the historical, it wasn't founded till nearly 40 years ago. So the actual catastrophe modeling we do now with predictive, with AI, wasn't around, right? There was no AI, it was expert systems. We called them expert systems. And then everyone got scared that they were being put onto a computer and they didn't want to take part in these expert systems. These expert systems are now called first wave AI. And they've moved on to machine learning and to third wave AI, which is what I'm doing now, which is causal AI. So I think a maturity of understanding data and its value. Data is now an asset on a balance sheet, in my opinion. It wasn't back then.
So, we have a lot of subjects to touch here. So we have one, AI, and the integration of AI in industry and in the world, basically.
Right.
Then we have intangible assets, right?
Yes.
And how they've become more and more valuable or more significant or more measurable through digitalization.
That's right.
So how do you see this evolving in the coming years?
Well, I see intangible assets as the most important issue here because there are many things that are intangible assets. Some of them are measurable, some of them are not. Data is an intangible asset. It's the ultimate. Reputational risk is an intangible asset. Yeah, brand awareness. And cyber, climate change, all of these emerging risks. And where there's risk, there's opportunity, right? As you know, we're in Hong Kong, so the Chinese word for opportunity and risk is very similar. So where you have risk, you have opportunity. So I think all of these intangible assets, and now there are mechanisms to measure and predictive analytics to get them onto a balance sheet, and then create intellectual capital. So intellectual capital is probably the most important because it's an umbrella term for all these intangible assets. And when you get intellectual capital on a balance sheet, on the liability side of a balance sheet, you can value that company for an M&A or for a fintech, insurtech takeover or anything, much better. And that gives you a true value of a company, and you separate it from goodwill, which is, and then you got the asset side where you can see how things are done. But I think to understand tokenization is one of the, and all of this, you need to understand both sides of the balance sheet. You can't just understand assets; you have to understand liability as well. And
so how would you explain these two sides of the balance sheet and how they integrate into tokenization?
Yeah, well, an asset is obviously the value of like a token is an asset, right? So we have assets that are non-digitized. We can digitize them and make them. They become an asset that's measurable, and we put them on our balance sheet and say we own these assets. This can be IP. It can be, I've done a lot of tokenization around intellectual property, which I can tell you about. It's a good example. People understand it. But on the liability side of the balance sheet, quite often these assets are don't know who owns them. The ownership is not there. The provenance of them is not there. There's a lot of missing gaps that to actually get the true value. So when you take the intellectual capital and you use a counting function to move them to a balance sheet,
you can give them a value.
You give them a value, and then you can see from the balance sheet the true value of the company. So when you're doing a M&A, you are getting the proper picture of the company's assets plus intellectual capital, whereas many balance sheets and corporations don't have their intellectual capital on a balance sheet. In fact, you look at all those financial inclusion programs. You talk about blockchain as well. I refi, right? The DeFi, regenerative finance, which I believe is a new way of, reforming the world, if you like, right? Reglobalization might be a better term. Refi, a lot of those things contained in refi do not appear. Financial inclusion, all of the human capital, all of the IT systems, everything that was put into what people called microfinance, microinsurance, which I was extremely involved in at early stages here in Asia, never got to balance sheets. So therefore they became a charity kind of program, once off, weren't renewed, and therefore if they're not renewed, they're not sustainable.
And they're not charity either,
they're
right?
Not charity, they shouldn't be charity, no. Yeah.
So for example, one of the main assets of a company is it's people, basically, right? It's the human talent, the human capital.
Yeah.
And I remember I was speaking with an entrepreneur that was also talking to a VC, right, to raise funds. And he said something along the lines that the VC didn't see the value of the team that person had. And that person has an excellent team, right?
Yes, right.
So this is where we could potentially see the whole change of valuation of companies when you have amazing tech, right? And things that are very easy to measure. And things that should be measurable through digitalization, through tokenization, such as human capital, for example.
Human capital
culture.
Plus informational capital, plus customer capital, which is reputation, right? All of these come together to form intellectual capital. And there are companies that are actually, well, when it comes to, we're in a kind of recession now, right? So VCs are not exactly very happy at the moment because valuations have been slashed and
because valuations were not realistic, maybe.
Well, maybe, but if you have people that have bought in, investors that have bought in at a valuation at an early round of say 60 million, and then you slash the valuation and it's climbing to 30 million. You have to go into debt financing, otherwise you upset all of the investors that came in at the 60 million valuation. So it's a kind of cycle that turns around. But I think venture capital will probably not been very interested in intellectual capital. They'll look at the quick return from an information technology point of view. But there are other aspects here. And when it comes to the M&A, I believe, and now in this particular debt world, using your collateral of your IP, for example, which is tokenized, that you can put that tokenized collateral in on the back of a loan and get someone to approve it, like put your money where your mouth is, if you like, to use your own IP to develop more. that is where the tokens that I used, actually physical NFT tokens, based on a patent, which is an immeasurable intangible asset, and one that can make a token that can actually be attached to a project as collateral to get a loan from the bank, and then we can insure that loan for residual value on the back of that token collateralization. And this, I believe, I wrote a white paper where I gave 3 companies that are doing this, right? One was the patent, one was an intellectual capital company, and the other is a digital insurance marketplace. All of them are enabling loans to be created rather than just equity financing. Because until you could do this, all the VCs were doing was equity financing. Now we can get loans from banks based on debt financing. And I think that's a big change.
So who will be mostly benefited from this changes, and who will be mostly challenged?
SMEs.
SMEs.
Small and medium-sized companies. I think when you look at the patent thing, we what we did was we took all the patents out of the world's patent offices. It's public, right? And we just took them out. We took 25 million out, I think, but it was quite a lot, including in China and America. And we put them onto a blockchain foundation, and then we turned them into NFTs. Then we put an AI system in, which evaluates that patent back to 1850 in a split second, and gives us the idea of the quality of the patent and the validity of the patent. That gives us risk score that can be used in insurance underwriting later on. Then we set up a loan company to a fund, right, to lend money to people, and where they would take that token and they would use it as their collateral, and then we insured it at the back. So this is the concept of that tokenization, and I think. It's and then we put the big. This was mainly for SMEs, right? But then we took the big company patents, like the big Chinese companies, the big supply chain companies in America, and they had patents during COVID that they created very quickly because the supply chain was digitized during COVID, right? Whether it was efficient or not, it was. But there was a lot of patents that weren't used, so we then took them and we put them into a pool. Where the big companies put their patents into the pool, and then we got the small and medium-sized companies to come into that pool and use those patents from the bigger companies in their innovation. So it was a way to pool talent and
support
innovation.
in a way.
As well. It was called a smart pool, pool for patents. But patents are easy to measure as an intangible asset, right?
Yeah.
But there's a lot more beyond that. But patents were the first one to select because you can easily measure them.
What would be the second? Like, what are the next steps?
Well, outside of intellectual property, it could be cyber, could be reputational risk from cyber assets, and supply chain tokens. I mean, it's digitizing the supply chain so you reduce the middleman approach, so that everyone's inside an ecosystem, everyone's on the inside looking out rather than on the outside looking in, and then incentivize them all to complete a trade quicker, and then they get awarded some tokens towards the next trade, and things like that, and make the, it's an eco. I spent a lot of time with a company called InsureWave, which was an Ernst & Young project with the shipping company Maersk. And you had to build the ecosystem, right? So you had to get insurance people on board. You had to get shipping companies on board. So you had to get all sorts of different people inside the ecosystem. And of course, this was in 2016. So, no one wanted to be in the ecosystem with a competitor. Nobody wanted to share data with a competitor. So we had to incentivize people to onboard into this. But once they were in there, they were okay. But the initial fears are quite big in getting into these ecosystems, and the supply chain is the same.
Now, do you think fear has been driving some of the decisions? Because, what we've seen OpenAI, ChatGPT, and a lot of people are scared. A lot of people are afraid.
Yes, well, this is, ChatGPT. Well, I just chaired the AI conference here in Hong Kong, and I mean, it was financial services insurance mainly, but I did say that ChatGPT is probably not the solution for financial services right now.
It's not smart enough.
If I would, I mean, if I was a university professor, I might be a bit worried because you can create a you can create a course. You can create a course on ChatGPT in about 5 seconds,
Yes.
you know. But anything with large text, so it's in financial services, it's not verticalized, right?
Right.
So I wouldn't. No one should be really worried in my.
In your industry.
No,
In your world, let's say.
No, because it's not verticalized yet, and it's not specialized. You need specialized data sets coming from a human being. But when
So
it comes
this would
to
be
text,
small language models, not the large ones. For in the cases of financial
computational analysis models. But I mean, there's no reason to say why you can't combine a large language model to work with a computational analysis.
But then we would have to collaborate, and you would go back to the same point where you were, that some of these high executives of these companies were not that open to collaboration, right?
Well, I think the human. We've mentioned expert systems before. I think the human in the loop is now much more acceptable to people, right? We start as a guy here, a shipping guy. So we started this causal AI company called Vulcan, and it's up and running now. But it's based on a technology that put the first man on the moon, right? It was just bubbled to the surface over the years through the US, through Boston, and all the way around. But it's all about keeping the human in the loop, and the human.
So the human will always be in the loop, do you think?
Yes.
They won't get kicked out like this, like
well,
everybody
I don't get
thinks.
into an argument against AGI and against super intelligence versus artificial general intelligence. I mean, I think the human is in the loop because right now machines cannot reason like humans, and that's the difference between causal AI and other AIs. Is that we think like you think. If I hadn't have done that this morning, I wouldn't have fallen over. If I'd have gone over there, I would have been still walking on 2 legs. This is the way humans think. Machines don't think that way. And also correlation. So it's a change in correlation. If the temperature rises, people get sunburnt on the beach. People get hot, they go and buy ice cream. A machine learning will tell you that there's a correlation between temperature, ice cream, and sunburn, but it'll also tell you there's a correlation between sunburn and ice cream, which is completely spurious. So we need to get rid of all. There's no way a human would see correlation between those. So you've got to get rid of all those correlations.
But the proponents for AGI say that artificial intelligence will get to that point of reasoning like a human.
Yes, eventually, I guess that. But I mean, you're going to put a timeline on that. I know.
Well, some people say it's going to happen in like 5 to 10 years.
Well,
It's
a bit difficult. I mean, working on causal AI now, the human, you can't. A lot of people say they've got AI. What they've got is automation. They go straight from a data set into some solution. That can't be AI. Not really. You need to you need to have some kind of data set that's created from a human to add to the architecture here. But I think it's going to be big. Causal AI is now growing on the Gartner hype cycle. I think when regulators are going to love it because it's explainable AI, and explainable AI is something everyone talks about, and this enables you to explain why a price went up, why did this wildfire happen in Hawaii? What was the reason? And we can right now we don't do that. We just correlate 2 variables together to say if there's an earthquake and if the stock market collapses, this what potentially could happen. And that's not a way to do it.
At the end of the day, AI has to be validated, like by humans, like you say, keep the human in the loop, right?
Yeah,
so.
Yeah, sure.
It's like you say, it gives a lot of explanations. It's explainable from a technical standpoint, but it's not infallible. And at the moment, a lot of people are treating these AI models as if they were infallible, right?
Well, yeah, it needs a hint in my opinion, it needs a hint from a human to reduce the search. To do AI, you've got a solution has to scale to the size of the internet, and that means you've got to have millions of data sets at your disposal, and you've got to be able to bring them in. Like I'm doing healthcare leakage, healthcare fraud, but fraud's not a nice word. So we'll say healthcare leakage, which could come from many sources, right? But while we're doing that, we're creating diagnostic paths that are coming out of this healthcare analysis that show us the best treatment for a patient. While we're doing that, we bring in toxicity databases, air quality databases, and we can start to predict different people in different regions because of air quality, what that will do to health. Therefore, we're making some better predictions. Yeah?
Are you also integrating that in the blockchain? I suppose you are, right?
Oh, you have to integrate the
If not, you will lose control.
Well, blockchain to me is the protection of the data layer. I think it's been overhyped. A lot of people talking about it, misunderstanding what it really is, because we started with data integrity, which was the blockchain, the three parts of the cybersecurity triangle.
Okay, one second. David, could you explain in your words what blockchain is to somebody that doesn't know anything or not much about blockchain? Because part of our audience are people that is really just starting to get involved in this world, in the world of tokenization, the world of blockchain.
All right, let's go for situational awareness of data. I mean, take a haystack, right?
Situational awareness of data.
Yes. So here's a haystack, right? So when you have a haystack, what do you think of? You think needle in a haystack.
Yeah, I do.
You think needle in a haystack. So needle in a haystack means that it's a bit difficult to find out the situ awareness of a piece of hay. If you have blockchain, you'll be able to find out the situational awareness of every piece of hay in a haystack. And that is very important.
And that is a great explanation.
Well, yes,
Yeah,
but I think so. It's also moving from trust to truth, because right now, you say right now, but I mean we've always trusted the internet, right? The internet. I mean, I know Vint Cerf, he comes to Hong Kong occasionally. He invented TCP/IP, right? He's a great guy and everything else. And he was the first one to say we didn't put a security layer in when we invented the internet. We didn't have to, because we did it for academics and we did it for there was a nuclear attack. So we didn't actually, and all of a sudden the internet started to get used commercially, and that's why there wasn't, so it didn't tell the truth. So you need to put a lie detector for data layer into the internet to make the data tell the truth. So, you don't just trust that your bank account is correct. You don't just trust something that you're told. So when you put the data integrity layer in, like we did at Guard Time, we could measure every piece of data to see if it was been tampered with. We could tell the original piece of data, its provenance, where it came from. And then when you start creating tokens, that, especially if you're doing patents or art even, right, you need that provenance, and you got to have it. So you have to have that data layer tampering underneath. You don't have to have, when you talk blockchain, I'm not talking about the whole platform like Ethereum, right? I'm talking about the data. To me, the data integrity and provenance is the most important part.
So how do you think the blockchain as a word has been overhyped, misused, or misunderstood?
Well, I don't think it's a great word. I mean, but nor was TCP/IP. But remember, again in the .com era when the internet was being invented, everyone was going, "Oh, TCP," and now we just accept it like we accept the telephone. And a blockchain, I think a good blockchain presentation is one that doesn't mention the word blockchain. It's underlying plumbing. The most difficult thing is to demonstrate blockchain because it's under the hood.
Right.
We had to show how a piece of data was being signed with a hash key, and then how it promoted tampering. It put on a red light or a green light if the data was fine. But it's just the same. And blockchain is definitely an embedded plumbing technology that is essential to keep the data layer in a digitized world safe. That's why I.
So it's safety, basically. Safety and truth.
Yes, safety, truth, and provenance. Yeah, you need to know the life history of every piece of data, where it came from birth to archive, or back in again.
Oh, back in, yes.
Yes, whatever, yes. Yeah.
Absolutely. So in the future, let's say in 10 to 20 years, how do you see this world evolving with tokenization, AI, hardware?
Well, I look at it from a risk standpoint as well, right? I mean, the world is becoming more fully digitized now. So I think let's take ports for example, right? It's pretty important, right? For us, which is an example, right? 90% of goods go by sea, and all these ports, the large container ports in the world, where all of these goods go through, where we wouldn't have any food, toilet rolls, anything if we didn't have this shipping going. The ports were pre-COVID were what I call idiosyncratic risk. They had their own risk inside their own walls, but they weren't connected
Open.
to other people digitally the way they are. So after the pandemic, everyone is now digitizing like crazy, right? And so you then had a digitized world where you move from idiosyncratic risk to systemic risk. And systemic risk means attack on one port could affect another one, and then all of a sudden, so all of that. So you need to look at a fully digitized world and what the risk is. Space weather, for example. Probably you don't think of that as an emerging risk. Every 11 years, the sunspots on the sun create tornadoes and hurricanes, and sometimes they come down and hit Earth. The next high point is 2025 and July 2025. This is the first time ever that the world has been digitized at this level when the sunspots are up. They've already taken out many digital networks in the past, right, when we weren't fully digitized. So we're going to be fully digitized. Hopefully we'll understand where those tokens come from and everything else because of the blockchain and everything else. But we need to look at the risk in a digitized world and the opportunities that refi brings to combine a circular economy with climate change, financial inclusion, all of these big risks, and cyber all in one solution. Yeah, and then these are all intangible assets. They're not motor cars and things like this. They're autonomous cars. They've got cyber. They're all intangible assets. And 90% of the world's Fortune 1000 now are intangible assets anyway.
So we're talking about the world's Fortune 500 and how wealth redistribution will completely change, right? And we're in an epoch, in an era of where this wealth redistribution is actually happening and a real possibility, right?
Yeah.
So how do you see this taking form and evolving in the future?
Well, I look at wealth distribution through the eyes of the 3 billion people that have no bank accounts and have no thing. I mean, we're seeing in Africa, we're seeing tokenized, stable coins, for example, are going to be the primary use of billing, right? This is something that's already happening, right? And so these economies like Africa and other developing countries are going to leapfrog, and they're going to catch up, and because of the technology. And
you think they will catch up?
Oh, I do. I think right now we're going through a period of geopolitical fragmentation, which is a bit concerning. But I mean,
the things need to happen. You cannot the status quo can't remain, right? So you have
that's right.
jurisdictions that are very friendly, or at least very curious of what could potentially happen with all these new technologies. And then you have jurisdictions that are, I guess, the most powerful nowadays, that are completely against it because it's just so challenging to the status quo and to the power.
Yes. So by taking the weaknesses of financial inclusion in the past, a lot of those weaknesses have gone. The weaknesses were, no mobile technology, no internet technology access, no blockchain, no AI. So technology is no longer a barrier now. Regulation could be a barrier. So one has to look at how regulation is treated in this climate, because regulators are always, by definition, often behind the 8 ball, right?
Very behind.
Well, very behind, but also one has to remember that regulators aren't there. I mean, I know a lot of regulators, and I'm positive about regulation. I'm negative about over-regulation. But you can't regulate technology. You don't.
If you don't understand
it. Well, you can't regulate technology. You regulate a business process that affects a community, right? whether it be a country or a state or a town or a village. That is what you regulate. But to be able to regulate ecosystems of digitized blockchains and AI, the regulators themselves need to be inside the ecosystem.
They need to understand it.
Yeah, but they need to be inside it as well. They don't want to be on the outside of that ecosystem. They need to be on...
You think regulation should come from within?
I think the only way that a regulator is going to get the update on the blockchain immediately is by being inside that, and not going to be on the outside, right? They're going to get updated frequently, but that's why RegTech is an emerging market, and that's why it's going to be interesting. But regulators could have their own ecosystems that they communicate with each other around the world. There's also, but I mean, this has to change. They have to be, in Latin terms, they have to be a priori and not a posteriori. And that is the key for that.
But that's always been the case for regulation. It's always a posteriori, always.
Yeah, but now they can't afford to be now, right? It takes, if you don't catch up, there can be arbitrage. They were arbitraged enough in the internet era, and so they can now be arbitraged quite quickly. And I think no regulator wants to have an arbitrage situation on their hands. So they need to look at how they react. But in the insurance industry, the regulators meet once a year and have a big conference somewhere in the world, and they discuss this. But it is not there yet, but it does need to be addressed.
But I think that what they've been doing is just basically forbidding. But what they're not understanding is that you cannot really forbid transactions in that decentralized.
No, you've got to be in the same era as you can't regulate 21st century technology with 20th century regulation.
With 20th century logic, no?
Yeah, that's right. But I think for the crypto world, the DeFi and being accepted along with the big capital markets, regulation is absolutely essential.
Absolutely.
And we're seeing this, right? There's the Ponzi schemes that come out of this technology, it's no different to it was before. Previous .com era, when I was a kid, there was a famous guy called Savundra that Ponzi schemed everyone on washing machines. So we now just got a digitized version of that. So now we're using AI to see if a smart contract has a Ponzi scheme or not, right? So, and then you've got to check that the AI that checked that is okay. But I think I think you've got to regulate these things. And if you want another thing, you can't have a virtual asset without a physical asset. I think
there has to be always a bridge.
Always, yeah. Otherwise, I think you can have I will be very big red flags, right? If you've got things floating around. The mutual insurance industry and the Islamic finance taught us that as well. Islamic finance, you have to have physical assets.
This is what's happening with meme coins, for example, right? Yeah. This degen craziness about meme coins where everybody's just gambling in things that have absolutely no value other than the one that's attributed to it, which is kind of like the same way that money works, right? Like, why is this bill valuable? Because you and I agree it's worth 100. It's the same logic with meme coins, but like you say, there's nothing physical tying them down to reality.
We looked at guard time. Yeah, what we looked at was it's called Alpha Bill. We looked at maybe we should be creating the bill as a token, right? We all use a bill. I bill you, I send you a bill, and I when you pay that bill, the money transfers. You don't have to download the whole internet to verify that bill has worked. So actually using a bill as a token as a means of payment is quite an interesting concept. So the bill becomes the token, and so there is a whole system called Alpha Bill that's just based on that, and then using the blockchain technology that came out of Estonia in 2007. After the cyber attack, to protect the data assets of that country, because Estonia created digital embassies, right? I think Singapore is a digital embassy for Estonia. So if Estonia was ever cyber attacked again, they just shut down Estonia and open up the embassy in Singapore.
Oh, really?
Oh, yeah, digitally. Because in Estonia, the only thing that's not digital in Estonia is getting divorced. I think everything else is everything else is, I think you've got to think about that a little bit. But everything else is fully digitized.
Yeah.
The voting and so I cut my teeth on blockchain in Estonia, which is really an interesting place. It's NATO's cybersecurity headquarters also. But I think they've got some good ideas about tokenizing the future, right, and how payments should be made.
So why Estonia? It's because of their cyber attack. That's why it's so important.
Yes, well, it's here. So, well, when it was cyber attacked, 2007, because it used to be part of the Soviet Union, right, and then it became part of the EU, and so there was a cyber attack, which closed down the country for 5 days. They brought a guy called anyway. The president was born in America, but he was Estonian parents, right? His father was ambassador, I believe, or something. But he was brought over as a president because he was digitally minded, and he decided to create a digital nation of Estonia so that they wouldn't be attacked again. And one of the technologies that came out, many technologies came out of that era. One was guard time, which was protecting that data layer. And that then went global around the world, and now they're quite big companies. So, but this was the reason. This data integrity type of approach, adding to security from the perimeter and security from encryption, adding a third leg, data integrity was very important. But now they're using that technology for, say, tokenization of bills and things like this. So, and you already got the blockchain underneath. It's just embedded. You don't you just assume. You don't say, oh, Estonia's created a technology without a blockchain, because they don't. It's all there.
It's already there.
Yeah.
I think we're gonna have to wrap up now, but I would like to ask you one more thing. Where do you see us in 10 years, and how do you think this technology will shape the world in a very broad way, as in how we will see it in our day-to-day lives?
I think people's change of mindset will shape the world, right?
That's the first thing we need to do.
Technology, people's mindset has to change, but I think that...
because technology is already there, basically. It's just about us accepting it.
Yeah. Well, you have to have more trust in some of the. Moving from trust to truth. So when I vote for someone, I know that my vote counted, for example, right, and that kind of thing. So that kind of truth. But I think we become more digitized. I think the human will stay in the loop, especially in our lifetimes, probably. I would hope so. But I.
What would you like to see? You personally?
Me? What I'd like to see? Well, I've been through. I think I've had an unusual. When it comes to technology, I've had an unusual life, because I've gone from punch card to quantum computing, and my first job was on punch cards, right? And I've just been involved in quantum computing, so that's quite a span on all of this. I'd like to see quantum computing come in, invent new batteries, invent new energy, and I'd like to see the adoption of quantum computing. More global and less political.
How much do you think this actually, or do you know, has actually been invented and not implemented, because it just goes against so many interests?
Yeah, well, I think, I did a paper on quantum as well. I did a lot of research on it, and, energy, I think the battery is the biggest thing it can solve.
Of course,
and anyone who's against that is probably a little crazy, I would have thought.
Well, I was in the renewable energy industry for a while. That was my previous life before I came into blockchain, and that is something that it's been intended to be solved for the last 10 to 15 years already, and it hasn't. I'm not saying it hasn't really gotten anywhere. It's just not to the level where we would like it to.
Well, my first job was to program a mouse out of a maze. It takes ages to program a mouse out of a maze. In quantum computing, it takes 1 nanosecond. So when we can start programming mouses out of a maze in 1 nanosecond, we're gonna develop cures for cancer. We're going to develop the climate change problems, solutions.
Will AI do this for us?
Well, AI is a major part of this. AI comes along with the quantum. When you add quantum and AI together, you get that's what you get, right? You get more powerful solutions. Solutions that would take thousands of years for an individual human or computer to sit down and go through step by step, like the mouse went through here, the mouse went through here, the mouse went there. So, China's very big in quantum computing. America's got the biggest private investment. America's got the biggest government China's got the biggest government investment, and they're not talking to each other. So that seems. I'd like to see a little more communication on that stuff.
Well, I mean,
but that may,
like you said, everything's too politicized, right?
Well, it is at the moment. Yes.
It probably will continue to be politicized.
Maybe the geopolitics will always exist, but there was a time when people were cooperating on these technologies. I think they have to cooperate. I don't think they got any choice.
Why?
Well, because the
They just
increasing
compete?
risks. The risks are too big sometimes. The climate risk is not solved by one country, right?
But we're not necessarily rational beings. We love to see ourselves and consider humans as rational beings, but sometimes the ego or whatever other different motivations get the best out of us, right?
Yes, that's right. That's right. I understand that, but I think that I would like to see. You asked me what I wanted to see. I would like to see more cooperation in technology for these big risks of our time, and the big risks of our time are climate change, without a doubt. Whatever anyone says it's not, it is. It has major implications on healthcare, major implications on
infrastructure and everything.
On everything, and digitization comes along with this, right? And then you get cyber attacks and all of that, so basically we need to have the data-driven world. We need to be more acceptable to data as an asset, as another thing. Right, we need to treat data like we treat equities, gold, bonds, real estate. And I think that's happening. It will happen.
Yes, and the part of data, yes. But when we're talking about climate and the risk posed by climate, I don't think we're addressing it as we should. No. We're focused in many, many other things. Maybe the circle will close at some point, right?
Well, you need quantum computing to address climate change risk, in my view. Because a lot of it is about new forms of energy, and if you don't have the quantum, quantum's not that far away. The post-quantum started before the actual quantum, purely because of cybersecurity risks, right? But
there's too many interests, right? Because at the end of the day, if our efforts would be placed here, and this is the reason, this is why tokens are so important, because at the end of the day, whenever you start acquiring enough support from people, from regular individuals that see, right, for example, climate change as something of importance, and they start putting their money in there so people can actually develop solutions, that is where we can see the world changing. But as it is right now, people, the big oil corporations are still focused in their revenues and the investments they made 20 to 30 years ago. So there's zero interest in having clean energy.
No, yeah. Well, when the price of green hydrogen comes down from $9 to $3, and I think there's a lot of people doing very innovative stuff on green hydrogen. I think that the carbon credits, there will be carbon currencies, right? And there'll be limited edition like Bitcoin. They won't be using electricity. I think young people will use that carbon credit because all cryptocurrencies are a belief system.
That's money. That's
my
landlady
system wouldn't take the Ana coin unless Ana coin was famous, and then Ana coin, not based on anything, would suddenly become in circulation. So I think young people will look at crypto tokens, and already in the insurance industry, the life insurance industry, young people won't buy a life insurance policy if there's any oil and gas company in there. We've had to remove oil and gas companies from our investment portfolios.
Oh, really? Those are good news. Oh, no. I will not say that.
So, no, I mean, but eventually the green hydrogen and maybe water manufacture at the same time, because water's going to be a big risk.
Even more.
But there are big operations going on in like Central Australia and places where you got sun, sand, water. You can make the green hydrogen, and you can then swap it for the LNG businesses and create a carbon exchange out of it, and maybe, So I'm positive that will happen, and that's what we need to happen. And I think, the tokens of exchange are going to be a key part of this, right? And the rewards that people get for using these tokens. You've got to have a benefit system.
Well, yes, absolutely. You have to have a benefit system, and this always translates into money, basically. But it's also a kind of a complete change of perspective, right? Because in a way, I feel that the world is being divided in literally two types of people. Those that take responsibility and understand the power that they have in their hands, financial power, because financial power, it's freedom. So that is why freedom of finances is completely attached to the freedom of you deciding what you do with your life. And then there's other individuals that don't want to take responsibility, that they rather to being taken care of by the state and not have any power of decision. So it's kind of like the world is like being completely
So what
divided.
you'd like to happen is probably too idealistic and will not happen. You'd like a decentralized government so that blockchain takes over from politicians. You have a Wyoming type of DAO, because in Wyoming they invented they first regulated the limited company, right? And now their Wyoming is regulating the DAO. So potentially you could have a society many years down the road where the DAO replaces government. But this is too idealistic to talk about, and it's too far away.
Is it though? But I mean, at the end of the day, like many of the DAOs, and like I would say most, they're based on like tenants of tokens, like whoever has the most tokens.
Yeah.
And then it's actually exactly almost the same system. Like nowadays, the richest people are the ones that are making the decisions, right? They're influencing the government. It would potentially be exactly the same thing. At the end of the day, we do live in a capitalist society, and capitalism has enabled us to get where we are, right? So, like, of course, these systems, they're not perfect. But
we have a poster child in Estonia. So no one else has adopted the Estonian model yet. There is no digitized nation in the world except Estonia, fully digitized.
But how big is Estonia, though?
But it doesn't matter. It's scalable.
Yeah.
It is it's scalable to the size of the internet. Well, the
Okay,
technology.
yeah, you're right.
I mean, it's not a problem there. But I mean, if you look at the voting in Estonia is done by the internet. You wouldn't bring that internet voting into China because it doesn't exist. It's a different kind of political program. But you take it to a country that does have voting, and quite often they won't take the technology because it always proves that the vote who counted, right? So Estonia is completely accountable. People are the government is transparent to the people, and the people are transparent to the government. No, that is a great model, but it was founded in 2010, and no one is using it except Estonia. And they're offering the technology that they've got to give to other countries. They call it the.
They're not taking it.
Well, not yet, but it's an API. It's a country giving its API to another country. But I think it will change. But it's going to be a long haul. But
maybe it will be faster than we think.
But so my answer, what would I like to see? I'd like to see more Estonians knocking around. That's what I'd like to see. All right.
Gracias.
Thank you very much.
Thank you so much, David.
Thank you.
This is a Token.com podcast. Thanks so much for tuning in today. We would love to hear from you and understand what else you would like to learn about. So please drop a comment down below.